Welcome to Quantum Finance. My name is Parker. I am the head trader here, but I am not a financial advisor, and this is not financial advice. So, in today's video, we are going to do a recap of the chairman of the Federal Reserve's remarks that he made today in front of Congress. Then we will do an overall market review, and then we'll look at the trading opportunities. We will go over some tweets, and then we will look at the economic data coming up for the rest of the week. And I just want to say, if you guys appreciate the content that I am posting, feel free to like and subscribe. So, yeah, we had the Fed chair testifying today, and I'm just going to go over some remarks that he made. He said if the totality of the incoming data indicates that faster tightening is required, we are prepared to accelerate rate hikes. He continued to say the ultimate level of interest rates is likely to be higher than previously predicted. He said restoring price stability will almost certainly necessitate us maintaining a restrictive policy stance for some time. So he was extremely hawkish, more hawkish than expected. Um, yeah, this caused the Fed swaps to price in a higher peak policy rate of 5.61 in September. And it also changed the Fed swaps to reprice to a favor of 50 basis point hike this month in March compared to a 25 basis point hike that was previously predicted. So yeah, just the Fed chair being super hawkish today. Let's take a look at the markets. Surprisingly, in the debt market here, looking at the 10-year yield, we didn't get much action today in the on the 10-year yield here. Just kind of a doji candle, just sitting here in the middle of this range here on the upper range on the daily. As you can see, the weekly band upper band is starting to curl down. The dollar, the dollar having a monster day after getting a double bottom on top of this daily 20, breaking above Monday the 27th highs and coming into retest this previous high here from Friday the 6th, pushing up through the middle of the range to this upper area here. Yeah, extremely strong day for the dollar, especially if it starts breaking through these levels. Coming up, you retesting it as support. If it can start holding above this weekly 20 and it can start making its way back up to the upper range here, with this band sitting up here at like 109.7, I mean, this will come down and you have this swing high right here. So yeah, I'd be looking at this 107.9 to 109 area to be its target if it does start to pick up some more strength here. S&P 500, the stock market, as you can see, big red day today after our hammer tail rejection from yesterday. Coming back in to test this weekly midline. Bitcoin starting to roll after consolidating over the weekend. Looks like it's breaking through Friday's lows, starting to squeeze down to test this previous low right here. Coming back down into this weekly 20 EMA. So now we'll look at commodities. Oil getting a massive rejection off of this upper band, coming all the way down through the daily midline. Still green on the monthly chart here, but as you can see where it got rejected, it was this monthly midline and it was also the upper band here on the daily. So yeah, finding a lot of resistance there. Not quite able to get up through this $82 level. Gold, big red day for gold as well. Actually flipping red on the month. As you can see, just falling down through that daily 20, coming down to retest this lower band and these lower previous lows here. Still sitting in the middle of this monthly range. Silver, big red day for silver. As we've been talking about for the past couple of recaps, silver has been a lot weaker than gold. Silver here extending losses down below this previous wick right here from Tuesday the 28th. Getting a breaking down below the previous month's lows and making its way down towards this lower band, towards this $18 level, 18.1. As we said a couple recaps ago, that silver had been looking quite bearish. So yeah, that's the general market recap. So now we will turn to the trades from today. So looking at the scanner here, we'll start with our gap up scanner. We have this WW here at the top for the day. This is a more small cap to mid cap trade. It's not like our Apple or Amazon trades we had been watching, and I have it pulled up here. I don't really like to trade these. Well, I like to trade these personally, but I don't really want to promote small cap day trading on this channel because I prefer to keep it to just strictly like large cap blue chip options trades, because in my opinion, those are the least risky and the most consistent when it comes to squeeze crosses. That's the name of my playbook trade with the squeeze MACD cross trade line VWAP crossover. I'm just gonna call that a squeeze cross from now on for short. But I mean, these small caps do provide good opportunities if you feel like you want to risk, if you want an increased risk trade. See, you can use the same type of trade cross as we use on our blue chip options trades. As you can see here, the stock came up, consolidated, got its nice squeeze here. The momentum actually did not flip to the downside, but it did zero out. So, you have a nice, really tight squeeze here. You can zoom out. You have that 15-minute come in, catch it as support, and then push it to the upside. You also had a 15-minute squeeze here. The actual trade line VWAP cross happened much earlier in the day, but the 30-minute did end up crossing right here at the same time that the 15-minute did catch the price. So now we'll zoom out a little bit on the daily chart. And as you can see here, looking at the weekly, I mean, this had just came down a lot, got really tight squeeze, and then we just pushed up on news that, I'm pretty sure the news was that it was buying some company for like 106 million or something like that. Yeah, they're trying to buy this Sequence company for 106 million. But yeah, we're not gonna spend too much time on that trade, but that was a squeeze that was at the very top of the board, so I had to show that to you. We can look through the rest of these. Not really any other good squeezes. There was a squeeze here on PTGX, as you can see it right here. We'll take a quick look at that. This is another like mid cap, small cap stock. This is not our typical like trade we had been having so far. But this one was not that ideal either, but I'm just going to show it to you real quick. Because you did get your push up, your pullback, your consolidation, your momentum switch to the upside. You had your squeeze here, but look at this. Look at how short this squeeze is, right? If you stick with our strategy and you enter in only during squeezes, because that is statistically the best time to enter into a trade, you had one candle. I mean, you had one 5-minute candle to get in this trade, which was right here. So that's why I'm saying these mid-cap to small-cap stocks, not ideal, higher risk, but you can apply the same squeeze cross strategies. I will zoom out real quick here so you can see this. As you can see here, the cross actually happened much earlier. It just came down in, caught the price, got the trade line VWAP crossover here on the 30 minutes. Very similar to the other trade. So, but we're gonna go over the better trade today. That was not a small to mid cap trade, and that would be in the S&P 500 itself. So, This trade was a put options trade, or you could have short the futures. This trade was to take advantage of the weakness we had after the massive hammer tail rejection we got yesterday. And as you can see, we had this is the 5-minute on the S&P 500 ETF. You can see, let me zoom out here. Well, you can see the open, big drop, came up, bouncing the VWAP, pulled back again, got our momentum to the upside. We got a big squeeze here. Momentum actually shifted positive before reverting back down to the downside momentum. You had VWAP here. You had your squeeze. You had downward momentum. You had your trade line VWAP cross. It happened actually earlier, but it did happen here on the 30-minute. So when you have your squeeze, you definitely want a 15 or 30-minute trade line VWAP crossover. And I do want to note here on the 30-minute, this line that I have drawn, you can see this high right here. And this high, you see how they line up? That's where I drew that line. And if you look on the 15-minute, we got that rejection. It lined up here with the trade line and the VWAP to act as one large area of resistance, right? You see that? This is just one large area of resistance with our squeeze to downside momentum. With downside momentum here. We can zoom out a little more. On the daily. I mean, we already looked at this chart on our trading view, but yeah, so we can look at the options for this. I actually don't have them pulled up currently. So let's see what we had here to work with. Yeah, so it's looking like these 400s right here do have the most volume. Yeah, these are definitely the play of the day. These 400 strike put contracts. So we'll look at these. Remove that study there. I don't know why that's like default on all my charts. It's so annoying. But so say your entry was here. During the squeeze with the trade line VWAP crossover on the 30-minute, you have the downward momentum flipping bearish here on this side. So say your entry was here between 12:50, and 1 o'clock, right? Your entry was somewhere in this area with a profit target down here at this 50-day moving average. If you've watched previous videos, you do know how these 50, 100, and 200-day moving averages are magnets for price. So this short would be a bet that this price is going to come back down and retest this 50-day. So say your entry was in this area, this 1255 area. These contracts were sitting about, we'll call it on the upper range. We'll call it 80 cents. And when it did come down here and hit this 50-day, these contracts were up 150%. And at their height, these contracts were also up 200%. So yeah, really nice put trade here to take advantage of the weakness in the SPY. It should have been, to me, it was kind of obvious that we were going to have a red day today. I mean, obviously, this was a lot larger than anyone could expect due to the Fed being as hawkish as it was. But this kind of hammer tail rejection here, I mean, that's an obvious topping type of candle structure there. So, yeah, that'll do it for the trades. Now we'll look at some tweets that I saw interesting. And this is actually a chart of the interest rate futures bets. So now the futures are seeing a 53% chance of a 50 basis point hike in March. And we now have a near 35% chance that rates go to 6% plus this summer. Just a month ago, the odds of a 50 basis point hike were 1%, and peak rates were expected at 5.25%. Here is just a visualization of how the market performed today with, here, Jerome Powell strikes again. And this is just like a quote from him saying the current level of debt in the United States is sustainable. However, we are on a path where debt is growing faster than the economy, making it unsustainable in the long run. So yeah, this is more or less just him saying what everybody knows, that the US dollar is going to zero in the long run. And here we have more about this TikTok. We have the White House urging Congress to act quickly on Senate legislation that could ban TikTok. It's really weird how much they're talking about this. I'd be surprised if this actually happens. And here's just why you need to invest in a chart with the purchasing power of the dollar, going to zero, and the real inflation adjusted price of the S&P 500 rising. And here's also the 2-year yield exceeding 5% for the first time since 2007. So to wrap up this video, we will look at what we have coming up for the rest of the week. So tomorrow is Wednesday, March 8th, and it is kind of a stacked day. We have non-farm employment change. We have the Fed chair still testifying. We have job openings, and we have crude oil inventories. So that'll do it for today's video. Appreciate y'all watching, and I will talk to y'all later.